Rupeek has built potentially India's largest digital gold loan platform, served more than 5 lakh customers across 60 cities.
Gold as an asset class is part of Indian household, but it is socially very taboo to borrow against it. Borrowing against gold is seen as a sign of distress. We're competing against first offline industry, pawnbroker, some of the shadow banks. I want to make sure that the same kitty of gold services medical emergencies or God forbid any unseen expenses, and also I'm able to leverage that and generate working capital, which my business grows.
In a regulated business, regulators are at the top of the food chain, and rightfully so.
As now an insider for a decade, I think our regulator, as you know, I could say it must be in the top decile of regulators across the world. Not all the negative news came at one go. So we had bunch of regulatory changes, bloated cost structures, liquidity challenges, but all of that we could overcome because it was sequential, not parallel.
Anyway, it takes a special kind of courage to... Where should I look when we start? Phones are not here only, boss.
साइलेंट उसमें एक जो टॉप मतलब टीम ने कुछ
खत्म कर लेते हैं. All good? Welcome to the Day One podcast by Elevation Capital, where we chronicle stories and journeys of founders that we partner with. Today we have Sumit with us. Welcome, Sumit.
Thank you, Mridul.
Sumit's the founder of Rupeek, which is monetizing India's $1 trillion gold asset as a class to provide dignified, affordable credit to lakhs of customers in India and hopefully soon millions of customers in India. Rupeek has built potentially India's largest digital gold loan platform, served more than 5 lakh customers across 60 cities, and half of them are first-time gold loan borrowers. So that's pretty impressive. Sumit, welcome, and thank you so much for coming to the podcast. We backed Sumit in the recent funding round. Not so recent, actually. It's been 18 odd months. But good to have this chat finally. Welcome, Sumit.
Thank you so much, Mridul. Thanks for the invite.
Awesome. Like, I always like starting these with, original stories. For you, it goes back quite some time back. So maybe rewind us back to 10, 11 years now.
Yeah, I think it was a previous venture of mine when I met you first time. And naturally, both of us were much younger.
I'm still young.
So the journey started with this insight that, more than any venture capital funding, I was thinking pure dhanda kaise karte hain? Like, how do we build a very organic business? That was at least the original insight. And growing up in a Marwadi family, lending was something which I had always seen. In times of surplus, you deploy cash, and whenever there is a seasonality in business, you lever yourself, you borrow, and you deploy that cash in your business. That's essentially like bread and butter. Part-time money lender is something which almost all business middle class families have seen.
Of course.
Especially back in the day when unorganized credit used to be a bigger thing. Now, this was something very intriguing that there were so many inefficiencies. And right around the time when we met, I was quite inclined that within credit, gold sort of stood out. Because it's almost like arbitrage. You have such a high IRR, so low monetization, and credit costs are virtually zero. But still people pay through nose to get a good, quick turnaround on gold loans. So that was really very interesting. I think very helpful and fortunate that got the right set of people, advisor through the journey.
That's awesome.
Yeah.
Awesome. But so tell me one thing, look, gold loan is now age old, right? I mean, we've all heard of the big M's for a long time, all these companies, and still when you look at the data, you see, oh, this is so much asset, only this much is monetized through loans, etc. So what do you think is the root cause? Like, why is it monetized so less?
Look, I think gold as an asset class is part of Indian household, but it is socially very taboo to borrow against it. It's almost stigmatized. I come from northern India where borrowing against gold is seen as a sign of distress. And if you look at what this atomic level thing is doing for the nation it is one of the biggest reasons for account deficit. We have probably the largest non-oil import India does every year with next to zero GDP multiplier. Now this is not just a nation problem, but at a family level, the social stigma is so deeply rooted that people want to move away from this asset class. And almost ironically, people are willing to pay higher IRR in unsecured loan, but not take gold loan. Although, I mean, the big M's have tremendously changed in terms of marketing dollars, creating awareness, and generally this nuclear family concept has given a tailwind to the entire gold loan market. So this fundamental thing to be solved, which I think is social stigma in gold loan as a borrowing class. And second, which I think is an important problem to solve, is while enabling distribution, how do you bring the cost of distribution down? Today, the OPEX to AUM or any mode of distributing gold loan is so expensive that people have to pay almost 30% interest rates, 25 to 30. The big ones might be slightly cheaper, but again, distribution is finite for them. And that these two problems put together, the asset class is not growing head over heel, which one would have imagined should have been the case given low penetration of gold monetization in the country.
Tell me, how did you use some of these insights to, I mean, we'll come to the current operating model, which has evolved a lot, but maybe go back to day one again to say, how did the first transaction look like? Bunch of insights you had either on stigma, either on OPEX, either on distribution. How did you use all that to start?
Mridul, you have backed so many founders, met so many founders. Every one of them in some shape and form is naively optimistic. If you are not, you can't start. And the journey was somewhat similar for me as well. It was very naive assumption that, look, as an analyst, you look at all the cost centers. One thing I was very certain, if you don't have public deposit or proprietary data, I don't want to understand and sort of do anything in the unsecured space. Within secured, looked at bunch of these asset classes, and where gold resonated was, again, family was always into credit, but I never saw gold as an option to pledge and create liquidity in my own family. And this was again social stigma, taboo. I was also in equity research, and there also I saw that what these guys were charging was obnoxious and growing head over heel. This is 2008, 9, 10 period. And promoter holdings were crazy. So when I started going deeper into gold loan, met bunch of customers. I was here in Bangalore because of my previous venture. When I met people on the ground, it was making less and less sense, because this asset class is like almost paying low credit cost, yet people paying very high. Quick turnaround to get money, but yet people run away from the asset class. So there is something definitely to be solved. And while starting Rupeek was the assumption that, look, if we reduce this OPEX cost, we can probably service the customer at a fraction of what others are doing. And if we can somehow enable a bank's branch for distribution and sort of amplify their base, partner with bank, then you have cheap credit, you have distribution into hinterland, and sort of work with them to bring this to masses at a lower cost. That was a very naive assumption. Of course, we went through our own journey of ups and downs.
Of course.
Yeah.
Of course. I mean, the way I look at the model now, it seems very unique, right? I mean, very few people, I mean, there's this whole narrative I feel in the fintech world of fintechs versus financial institutions. I think you're one of few guys who partner with banks deeply. You've evolved over time to have different models, some things on your balance sheet, some things co-lending, some things just distribution. Maybe talk us through that evolution.
Sure.
And like how has that shaped for you over time?
I think given the gold nature, it was, we had a lot of, because of the underlying asset class, I would say, a lot of lenders were comfortable to forge a partnership because there was a line of sight to build larger and larger scale. And essentially credit underwriting is established because of the gold. So you don't have to really worry about whether at certain scale the risk reward seen by platform and banks sort of starts diverging. So that was, I think, a very foundational cornerstone to the entire journey. The other piece which we have learned over the years through our interaction with lending partner, RBI, veterans of the industry, is to appreciate how you scale, how you start doing meaningful numbers, and how this entire compliance lens, risk lens, putting skin in the game is extremely imperative. Again, few years back, if you would have asked me when we started, back in the day, it was very different. Like China still had the, and financial, every country had like their own creditors in Brazil and Monzo, and we also got carried away that we don't have to necessarily think of ourselves as a platform who is not going to put skin in the game. It can be pure platform, and that is where we over the years have appreciated that it is more responsible growth when you do that, if you have skin in the game at a loan level, and that has been a big differentiator. Now through interactions, through RBI's circulars, it is quite clear that this is the swim lane RBI wants most and most fintechs to swim in.
Makes sense. Makes sense. Maybe that takes to the question of differentiation, right? So I think there are. I mean, I always think of this as three stakeholders. One is what's the differentiation that you believe Rupeek has today in its own operating model, because then that should lead to superlative returns for the company to do well. Two is what's the core differentiation and proposition for the banks to continue to partner with you. And third, and maybe the most important actually, is customer. How does customer experience the differentiation you have? Maybe you can talk through each of these stakeholders.
I'll start backward.
Maybe start with customers
See,
first.
I think customers think of gold loan as a common man's credit card or overdraft limit. And I say this as a person who has seen family business very closely, that opportunity and negative surprises, whether it could be a medical emergency, it could be some unseen expenses which are not planned for, these are part and parcel for any middle income Indian household. Now there, all of us and most of the people listening to this would be fortunate enough to have one or the other financial instrument. But for masses, that's not the case. And gold exactly plugs that gap. So having and now because of this, the mindset customer has, it could be even in rural hinterland of India, is to have the maximum loan to value ratio for their gold. And while doing this, the mindset in customers' life is that I want to make sure that the same kitty of gold services medical emergencies or God forbid any unseen expenses, and also I'm able to leverage that and generate working capital through which my business grows. And they're okay to pay a little bit extra, but service is extremely important. Loan to value, distribution, these things take a upper hand. And the reason I believe this happens is because mostly these small businesses at a small scale have good ROCEs. Now, in this journey, what we have understood is this is the pain point, which is creating distribution where you can service a smallest ticket size profitably to a larger ticket size, and enabling, for example, a leading bank would have thousands of branches, but gold loan enabled would be like 1/5 or at best 1/4 of them, where they have appraisers. If they don't have appraisers, they have to dial in, call them on demand, which creates delay. Even if it is a few hours of delay, it's not acceptable to most customers because these are urgent loans. So this design principle of keeping that customer in mind is where we have started building the entire journey, which means the products offered by bank are enabled through a digital means. They are met the expectation of customers, while maintaining risk guardrail for a bank, the loan to value ratio, what they are seeking. And all of this has to be enabled throughout the country in a risk-free way, where you take care of fraud, collusion, and sort of ring fence the lending partner, both the institutions who are co-lending, as well as servicing customer in that defined 35 to 40 minute TAT. So this is where I think lenders also start valuing you, because once there is a sticky repeat customer base, risks are taken care of, their existing branch infrastructure is leveraged in a way where whatever business Rupeek is adding is over and above their core business. So it's highly profitable for them. And why it works for us is because we are trying to compete against not with banks. We are rather enabling banks. We are competing against first offline industry, pawnbroker, who are at 35% annualized rate, and some of the shadow banks who are at much higher IRR. All of this is because of the inefficient OPEX model. So by taking that out, we are able to reduce the interest burden on the customer.
So in a way, if I have to think for customer, faster TAT, lower cost of borrowing, superior service.
Distribution, because a lot of these bank branches do not have full-time appraiser or quick
so you're
services.
able to reach.
So one is distribution. Once you have reached the branch, then turnaround time. Once you have obtained the financial product, which is gold loan, the right product construct, because as we discussed, loan to value ratio is very sensitive. And when you look from bank's lens, they're always skeptical for a new to bank customer demanding high loan to value ratio, because that is a classic fraud signature. So over the years, we have taken care of all these for customer in a way which is compliant for bank. We have cleared like now 7 RBI audits across different banks and cycles, and we have also been able to demonstrate that there is absolutely zero credit risk for our lending partners. So these two things, which is compliance and risk, are at the heart of lender partnership.
I always wonder, like, lending is not a business where typically people have thought of customer delight or customer service. I do feel though, like, you've done a bunch of unique things. Maybe you want to talk through that, like, how can they monitor it on the app, to bit of this part release part, like, maybe talk through some of these customer oriented things you've done.
So look, customers are, first of all, they are seeking the product in a definitive turnaround time, and for that they need to know a little bit of detail of functional utility for the loan ahead of time, which is how much loan I'm going to get, what is tentatively the scheme construct going to look
Transparency,
like.
basically.
So getting, and believe me, it's still very opaque in the industry. So what first is to get that going for the customer. Second is ensuring that small things like female in the house, they typically want to release their jewelry on special occasions. Now most lenders
get it back, basically.
Get it back. Now most lenders do not have that facility offered at all. So you pledge in a block and you take it out in a block. If at all someone is offering that, on those special occasions, they have to block time, go to the branch, take jewels out, identify, pay for that, and rebook the loan. It takes few hours.
Very frictional. Yeah.
What we have done is at every account level, you can see jewel detail with grammage, purity, and release amount only pertaining to that jewel. It's a very simple feature, but what we have seen is that this has turned female in the house as our champion, that they want to pledge via the platform. So we have added more features where we are able to ensure that customer is able to draw these funds and different form factors, whether it is a term loan, overdraft, credit card. These different financial form factors are something which cater to different end objectives of customers. So this is something which I think is a ongoing journey. Building this with bank takes a little bit of time. So yeah, early in that.
Oh, that's wonderful. Now, besides these three, the company itself, your banks and customers, of course, in a regulated business, regulators are at the top of the food chain, and rightfully so. Keen to know your view on how regulations have shaped up. I know last at least 18-24 months have been quite game changing in the way things have shaped up. So keen to get your view on the regulatory evolution.
Yeah, I think, look, as now an insider for a decade, I think our regulator, as I could say it must be in the top decile of regulators across the world. This is tremendous. And again, a lot of time we don't have the entire information privilege that why they're taking such decisions. But when you peel the onion, we have realized that they have a lot of foresight. Whether you could argue about P2P crash in China, it never happened in India. Now again, different perspective could exist. For gold loan, we saw the same thing, that these guys have now brought out the most comprehensive circular. even on co-lending, it is fairly detailed. Still, there would be 10-15% sort of clarifications needed.
Yeah.
But I think structurally the regulator is very clear that they want to maintain the balance between innovation and risk. And as you said, at their scale, their job description, rightfully so. So what we have seen is fundamentally the co-lending model, and I'll talk about that as well because it deeply influences us and many other fintechs. The view they have taken is clearly to bring the best of deep balance sheet and distribution, customer servicing and acquisition, and do it in a way which is now no more longer ambiguous, very crisply, clearly defined how it has to be tackled. Maybe one or two clarifications are expected very soon. That provides now first a sort of a base river bedrock, I would say, for forging partnerships. Within gold loan, the view these guys have taken is very progressive, where they have recognized that the cash flow of the business and gold as an asset class, both combined can be evaluated to look at the loan quantum and the IRR which has to be charged. In my mind, this is very progressive because this is going to bring many more people into gold loan. Earlier, this was only available, not in so much clarity, but it was available to say agricultural loans. Now, for any income generation activity in the country, this could be eligible. Other than that, in terms of whatever confusion or old practices in the industry have now been formalized. I'll not get into detail, but renewal of loans and drawdown when the gold prices go up. So there is no longer ambiguity, and what is great about this is now banks are thumping table and saying that they want to do both partnership and gold loan. So my sense is next couple of years there's going to be flurry of such partnerships and lot of tailwind in terms of banks jumping into gold loan. And in fact, we are working with quite a few of them to form gold loan policy, within gold loan policy, income generation. So this is something which we are working from our regulated entity with some of the banks.
Makes sense. I mean, the thing that I've really admired since we have deeply partnered, then before that from a distance, is I feel like you've never treated compliance as cost of doing business, but more as an advantage that gets created. So maybe talk us through like some things you've done, especially in the recent past when regulations have cleared on compliance. And then at a broader level, like what does that mean as advice to potential fintech founders or other folks who are thinking through such kind of businesses?
I think, look, again, some of these things we have discussed offline as well.
Of course.
The compounding in BFSI is like endless. Bajaj is still growing at CAGR what it is growing, and I've been hearing that 10 years back this is Maxima, and still it doesn't feel like Maxima has it come. So the cornerstone is risk, compliance both. We happen to be in a sector which is blessed by not so much on risk volatility. Particularly on the compliance front, I see it as a enabler of that long-term compounding. Now, naturally, this has not been the default way of operating. When you are young, you are reckless, you want to move things, break fast and fail fast types. But now what we have realized is that at the core of strategic design, we have to create a compliance roadmap. And even if today there is ambiguity, you sort of assume the end state and think more from a finance 101, customer transparency 101, and see what is the right thing to do, so to speak. And wherever there is ambiguity or there is not clarity in terms of how to put thought structure, we have fantastic set of folks on the board. We have good set of advisors who are not on board, but these guys guide us. Now it is imperative that whatever is the end state you think is going to be, and you have to fill in the blank between the end state. Now easier said than done. We are also learning the ropes of it, but the cornerstone remains that the technology has to work in a way where they meet customer expectation, compliance expectation, and risk mitigation. So this is the job of a good tech product play.
That's wonderful. That's wonderful. Of course, I mean, things look great, and I mean, last year has been great. Touch wood, looks all positive, but it wasn't always that positive. So maybe talk us through a little bit of this tough phase you had, 22, 23 maybe. What happened? What are things you think you would do differently now? And then how did you have the resilience to turn around? Because that really became bedrock of our thesis and our sort of partnering with you. Yeah.
And thank you for that. It was really pivotal. You guys backing at the right time made a world of difference. I couldn't stress that more. And honestly, courage of yours, Mridul, particularly Elevation, and you, who became champion in those times. It could have very well panned out in a not so pleasant way. But I truly appreciate that. What I think what happened is the maturity as a leader of the company was not there, and it's still getting built. But when I say maturity, the appreciation in terms of how you want to construct your growth journey. What are the things you want to optimize? We chose growth over profitability in the early years. Now, right or wrong, I could argue it both ways, because that did give us scale. That did give us a lot of, head start in lender conversation, head start in launching cities, being first to market, first to mind. There were merits. Could have done at a fraction of cost? Of course. So that is where...
It's all hindsight, of course.
Yeah. I mean, I'm sure everyone has somewhat similar journey. If not, some are smart to learn it in a smaller cost line item. But yeah, I mean, the critical thing which changed in mind was the growth over profitability. And back in the day, those growth first mindset was not uncommon, at least in the startup world. What other than that really helped in transformation was having very solid mentorship, very solid folks helping throughout the journey. I mean, Ranga from 5-Star, we were fortunate to get a lot of guidance from him. Other promoters, Amit of Car, Dekho, and bunch of these guys were helpful in the journey in terms of appreciating how to chisel out this cost structure. And I must admit, a very patient board. This was an incredibly difficult time. I don't think we could have survived without the support of your and existing shareholders. GV, Anand, Rohit, all three were therein through thick and thin, and management, I must say. So this journey was not simple, but yet we were able to pan it out through guidance given and then chipping it away. Resiliency, I mean, in hindsight, you could attribute it to resiliency, but we also see that we are lucky that not all the negative news came at one go. So we had bunch of regulatory changes, bloated cost structures, liquidity challenges, but all of that we could overcome because it was sequential, not parallel.
But when it rains, it keeps pouring. So
yeah.
It felt like that. But by the way, it takes a special kind of courage to be humble and admit that. And I think, in my mind, it's not as simple to turn around that focus and also then be thriving on profitability now, touch wood. So I think that's been really fascinating.
I think the thing was, we were not wrong on macro call. I think a lot was okay in terms of sector selection.
Thesis was solid, yeah.
Yeah. Execution, we goofed up. There also the intent was not wrong. It was, as I said, learning how to balance profitability and growth of business.
Yeah.
Truly, like this moment where, and I remember I was at Vaishno Devi. At that day, this entire doorstep circular and like a lot of regulatory headwind came. You as an outsider, you were looking at so many panic situation in your own portfolio company. And honestly, if you would have walked away at that point in time, I would have completely understood. But yet, in a moment, in such amidst of such a chaos, taking that call and at a reasonably large check size, and putting your name, your reputation in line. I don't know how you had the courage to do it. Why did you back us?
I mean, first thing I want to say is don't make me look like a fool in future. So better make it work. uh, Look, I think, I mean, for me personally, it's been in a way 10 years of knowing you, seeing what you have gone through as a journey. Part of that journey was obviously situational, part of that were choices, which, as you will also remember, at multiple times we didn't fully align or we couldn't see it fully. Of course, we didn't have the insider's view. But it felt to me when we started engaging a lot more, I think in 24, early 24, that a bunch of choices you were making were directionally the right choices, which is, look, at the end of the day, it's a business which has to make unit economic sense to the bank, to you. There has to be a proposition for the customers, which was always there. The cost structure has to realign to the operating model or the realities of the market. And I think you were at the cusp of that turnaround. And I mean, I always feel like, we all talk about venture and growth capital and all. Like growth capital then really should be growth capital, right? Which is to grow the business, not burn in the business. So it felt like you were at that cusp. And of course, I mean, it was a very adventurous diligence and long phase, which, I must appreciate you also were very patient towards, which was, suddenly something stopped at one of the larger peers you have. Guidelines started coming. And of course, I mean, the easy choice could have been also to say it's too messy and all of that. But I think there were enough things we liked in you, particularly the business. And it almost, I mean, for me, it is important that institutions have memory. Like your institutional memory is very strong. You've gone through tough phases. You've seen what that means. So it felt like the way you'll run it in future will be very different. I must say it was also a little bit of your persistence, because your mode of operating then was not to push and hustle me into doing a deal. You could easily say, look, we agreed on something and this is fine. Like your positioning was more, look, I understand if you don't, but let's problem solve. And I don't think it was overnight. Like, I don't think it is as courageous as you're making it sound. To say overnight, I said, "Arey, theek hai." So it was much more like a consultative process. We talked about bunch
Lots
of
back and forth.
Yeah, we did a bunch of things which we'll immediately do. We thought about an approach to doing this.
No, I remember a lot of ref checks, a lot of RBI, ex-RBI.
Yeah. And you made us speak to all the people you were in touch with. We spoke about getting some advisors who have been pivotal. So I think we went through a process where that comfort kept on building. Of course, there's a risk. I mean, our business is a risk business. Your business is a risk business. So it never gets eliminated. I'm thankful it, at least last 12, 18 months, has played the way it has played and hopefully continues. I feel stronger about the business now than I've ever felt or have felt even at that time. But I do feel like that more productive or consultative or iterative process of working together, because the thesis was always there. Thesis was always, in fact, was very helpful in arriving at an answer.
Fantastic. I mean, we really found a great partner, I must say, and the team also thinks likewise. So I'm speaking on behalf of my team as well. This was very, very interesting journey, and uske baad bhi, some of the things which you instilled as a discipline to look at all the other non-cash line items is something. Being a Bangalore fintech startup, we were operating in a very different way, which I believe has matured us as a company. The other question, Mridul, I have is, I have met you, like almost a decade back or maybe more, first time. I've seen tremendous change in terms of your appreciation on the nitty-gritties of BFSI as a sector. I have seen you're extremely, maybe you always had and I couldn't deep dive, lack of my maturity, but I could see that you are able to zoom in at a micro level and zoom out and talk at a very high policy level, and very few people transform this way. What is that you have done differently to achieve such a deep expertise? I mean, it's 10 years, but in my mind, given the complexity you handle, It's quite remarkable.
I've only tried to justify earning my salary. You know, uh, that's the look. I think I always joke within Elevation, I'm the man with the proverbial hammer, because I've actually focused a large part of my time only on one space, and that brings by itself privilege and vantage point of seeing stuff. I think the other thing I keep telling the team also is that uh, I think we are one of the few teams, there are of course other funds also, which straddle both what I call the fintech, as you were saying, break things, move fast philosophy of Bangalore, and Bombay, which is very conservative DNA, old money, unit economics, and I think that keeps us a little sane. I always think of this as this Bombay versus Bangalore DNA. Um, and I think straddling both worlds has really helped me personally and the team personally, because as we work with more of these unit economics focused traditional models, it helps us appreciate what's achievable when you think cost first and profit first. But of course, as you work with founders,
But this is, sorry for interjecting, but the unique thing here is ability to do almost like growth or a pre-growth understanding. And then I've seen you have had positions in banks and large institutions. That wider spectrum.
no, but we have narrowed down now. So there was a point in time we used to do that. That is very hard to do. I think now it's pretty much early stage fintech and fin, but of course that network and universe helps. Hopefully it works out. But I love this straddling both worlds also a little bit, because this Bangalore side keeps us more excited about creativity and art of what's possible, and very product first founders, and then Bombay keeps us sane in economics, and I think that helps the team. But the privilege to do this over 15 years, getting the canvas to paint on and getting the liberty to kind of do what I want to do has also helped, of course. So that way, we are all at a very good place right now. Yeah. Awesome. So looking ahead now, by the way, one question I'm sure everyone will ask is gold loan business, gold prices increasing, fantastic. Of course, it's going to look very golden. So how has that impacted this whole bull run last 12 months? And how do you think of, if this reverses, what happens? How are you ring fencing the business?
See, I think even today, the entire growth, Mridul, we are having is largely distribution led. We still are sitting with a 60 to 63% of our blended LTV of the portfolio.
Oh wow, so that's still very controllable.
So it's pretty low, and we are not encouraging people to take enhancement. Maybe we're leaving value on the table. We debate about this a lot of time, but what we are clear is that we don't. All the growth should be more fundamental driven, which means per person productivity should go higher. More pin code, more branches should get enabled, and that should lead to AUM growth, even if it is tad bit, slower. So here, if even with the prices were to tank, both from a risk and growth standpoint, I feel very comfortable and confident. Yes, there would be some impact, but the growth CAGR will still be north of 40%, which at our scale is fantastic. So I feel all the design choices we have made in the past 12-18 months are more attuned towards distribution-led growth, and any gold price appreciation, it does help, but that is more customer-led, where they have a requirement. So we don't actively pursue them to take more.
Yeah, we're not taking higher risk.
Just for sure, for sure. If customer is looking for it and lenders are comfortable issuing that much.
As a platform, you enable that. So to end with maybe a cliched interview-like question, which is, what does Rupeek look like in 5 years?
I think we want to be a contributor in gold monetization journey for the country. Any shape and form, we think the institution can play a role in mobilizing such a vast resource. Gold loan is there, gold leasing is there, gold selling is there. Today we only operate in gold loan space. But what we think of ourselves is a gold monetization platform, and because non-destructive way of mobilizing and monetizing this gold is loans, that is going to be our focus area. Within that specifically, the objective in the next 5 years is to build innovative products with lending partners, which can take that social stigma away, which can enable friction-free way of consuming the credit, and building those technological rails is what we want to be as the biggest contributor.
That's awesome. I like that positioning of gold monetization because that makes you dream a lot of possibilities. In fact, that's a chat we should do separately. And what else does it mean? Maybe it's some time away. But thank you so much for taking us through this journey. It's really inspirational to see what you're building here at Rupeek. It's a category which is, in some sense, one would say unsexy, has been set, is done and dusted. But clearly, you're seeing there's a unique way to operate and build something of value here. So, big believers in Rupeek, big believers in monetizing the assets. Indians have big believers in secured lending also at Elevation. So, thank you so much, Sumit.
No, thank you. Thanks, Mridul. Thanks for the invite.